Hi, this is Tony Funico of Cover Magazine. I'm speaking to Andrew Miller, the Director and Chief Executive Officer of Citadel. Andrew, thank you very much, and thanks for the time.
Good morning, Tony.
Andrew, 25 years and 50 billion rand later, that's where Citadel is at the moment. Quite a nice position. What would you say is the secret to sustained growth over 25 years in a business like yours?
Tony, undoubtedly, I think one of our major differentiators in the market, which is, as everyone appreciates, is a very highly competitive one, to say the least, has been focus. You know, we had the privilege of celebrating our Silver Jubilee anniversary this year, and it was quite poignant to note that the business, 25 years later, is still doing exactly the same thing that it set out to do on its first days when it opened doors in 1993. And, you know, the point that I'm making is that in the type of environment that we operate in, I think focus is so important, because there are so many opportunities to get pulled away in times that we're currently living in, and defocus yourself. So, you know, the environment, the socio-political environment that we are in, is hell of easy to be distracted from a company point of view, I believe, in terms of putting out what I call the corporate bushfires that are constantly being thrown at us. And, you know, there's a lot of other businesses out there that do what Citadel does, and I believe to a very large extent they obviously do what we do. But the important differentiator for us, looking back over the last 25 years, is that it's not all they do. And I think by keeping our eye on being a advice-led wealth management business and only focusing on that has certainly spoken a lot to the successes that we've had over the last 25.
Yes. Andrew, you can be quoted as saying the following: when we adapt, change and grow, we do so with a constant focus on adding value. So two questions comes out of that for me. The first one is, in your line of business, what does adapt mean, and how do clients see value?
So in our environment, I think it's common cause. You go back 10 years and look at, you know, what happened in 2008 in the world markets, the correction that took place, and the way that businesses literally had to re-navigate or renegotiate, you know, their very business cases in some extreme instances. I think that from an adapting point of view, the first and foremost thing that causes that is the regulatory environment that we're in. Since 2008, there's been an incredible amount of work that has been done by the regulator in terms of educating the investor base, and that in itself has caused businesses like ourselves in the financial services industry to adapt to, you know, cost-to-income ratios have changed. There's a lot, you know, there's a big downward pressure on capacity in the businesses in order to be able to achieve the regulatory requirements. So that's certainly one of the first things. The other thing that forces you to adapt is that, you know, the world has opened up, and, you know, international players are constantly coming into South Africa or trying to access and source our market. And we've had to adapt to these changes. And the major outcome, I believe, of all of this has really been pricing. You know, we call it the race to the bottom, but that's fee sensitivity and pricing within the financial services environment has certainly become the hot ticket or the hot button at the moment where we are. So I think from an adapting point of view, that's certainly one of the headwinds undoubtedly that the industry is facing, and it's certainly one of the places that businesses like ours are going to have to adapt quite quickly to address that. I think in our case, being a fully vertically integrated business, from a sustainability point of view, we're well placed and well positioned to address those type of headwinds or pressures. But that, I think, is really what I refer to be adapt. From a client value point of view, it's all about the value exchange. You know, and I think there's a number of metrics that come into that. It's the service, it's the pricing, and then of course it's the performance. And I think it's a combination of those three things that come into when you're talking about what is a value exchange between you and clients. It's not about how cheap you are or how expensive you are or how much, you know, how your returns are, you know, outperforming the competitors. It's not these things in isolation. It's the mix of these three things, your service model, your accessibility, the quality of the advisor that you put in front of the client, obviously pricing nowadays are a given. You have to be there or thereabouts benchmark. Returns are a given nowadays. You have to be there or thereabouts at least. And I think it's the combination of those things that really come out as a value exchange proposition.
Certainly lots of pearls of wisdom there for financial advisors and investment advisors. Andrew, where to from here? Locally, is there enough scope for you to sustain this growth, or how do you see your growth going forward?
Yeah, I mean, certainly, within our world and our universe, our internal mission statement is, 2024, 2025, 100 billion plus business. I also often get asked, so what are your offshore plans? Where are you expanding overseas? How are you going into those markets? And whilst we do have a very firm footprint in the Channel Islands, via our funds business there and also our intergroup fiduciary businesses, we certainly don't see the South African market as being saturated at this point. I don't particularly, think that the South African market has been consolidated enough. I think there's still a lot of consolidation to do, and we certainly don't believe that our footprint or demographic in South Africa, is as much as it's ever going to be. So we still see, bottom line, a lot of scope and opportunity back here in South Africa, and that's where we're focusing primarily the majority of our expansion plans and our growth strategies.
Yes, it's nice to hear some positivity about the local markets, and glad to see that you see growth still there for us. Andrew, thank you very much for that discussion. As I said, lots of pearls of wisdom for guys in the business to learn from. But thank you for that, and I look forward to chatting to you again in the near future.
Pleasure, Tony.